Good afternoon, traders. This is Christian from Strategic Trade Group, and today is Thursday, September 26th, one day before my Vegas trip. So today's price action very lackluster. A lot of reversals from the previous day and reversals of the previous day of that day. So um, a difficult market to trade. I've got the risk disclaimer up in front of you. Everything in these videos always information only, not giving out any advice or recommendations. So let's go ahead and move on. Micron reported after the close today. Their guidance was weak. They beat on the last quarter, but I think kind of as expected that they're not really forecasting anything too strong. Obviously a lot of uh, China implications where they're not really going to put out strong guidance. Not a too much of a surprise. We'll see what they say in the conference call. I was just reading Jim Cramer was saying something like, with Micron, it always seems to be what they say in the conference call, even when the stock is up sometimes. So, it is down, to 46. They were implying what were they implying for this one? Let's go to our earnings channel. Implied move is about 6.8%. I was going to sell call spreads. I decided not to do anything. I did no earnings trade for Micron. I just didn't think it was enough to earn for the risk. But it looks like I would have been right. The reason why I wanted to do that, not because I'm a mind reader or have a crystal ball, just because I'm long a couple semiconductor names. So just thought it would be a good hedge. But so we'll see. We'll see if it comes back. But right now it is down about $2 from the close. So yeah, today's price action. We can kind of look at this. I've been really, I would say, probably over analyzing S&P, but it's really helped. I've talked a lot about the value areas. They've been providing some really good support and resistance levels around all the headlines, right? Sometimes you think you may be convinced that it's all headline driven, which we are seeing a ton of headlines. But the price action is really behaving pretty well around support and resistance, right? So yesterday, that was as far as we got, or was it this morning? I think this morning was as far as we got was the bottom of value. Even though I don't think that this is we're on the 1 hour. I'm on the 1 hour value area, so it's not that significant, in the grand scheme and for a long term. But for short term, it's going to provide some nice levels, and I think we got one here this morning, kind of telling you today not a great day to take risk, unless we would have moved inside value. Also on the 5 minute bar, we've broken into value right off the open. Again, it seems like, right, familiar story. This should not be a shocker to anybody at this point. But if futures start green, what happens? They go red. I don't have the stats for that, but I kind of feel like out of 10 times, that's about 7. We get 7. I even feel like 8. 7 or 8 out of 10 times, if we start like up 25 basis points, sellers just are going to knock this market down. So again, same story there. Where the weakness was again was in the small caps, right? Reversal from a reversal from a reversal, as I was saying. We had a nice. Actually, this was not bullish engulfing, but we're kind of right back to this level. What I'm also watching is the VIX. The VIX, which kind of did not have a really hard sell-off day yesterday. It was almost an inside day yesterday for the VIX, and where I thought we could get more volatility, which of course I'm looking at volatility, and again I don't like to super analyze the VIX chart, but I thought if we start to see volatility get back above 17, really 1725, we could see basically a deeper sell-off than what we're seeing. But we did not get that far, and again probably another inside day. Again, kind of cheating a little bit and saying that that's an inside day. So again, we're just kind of locked in this really difficult range right now. And the main thing is, even though I was getting a little bit more optimistic yesterday because I was seeing some bullish engulfing bars and things like Nvidia and a few other names that I looked at. What else was I looking at? KRE, Google. We can go ahead and look at those, even though those really weren't on my list. It was more of just an illustration of The price action, it looks like Google did fine today, just down 30 basis points, which is right again. SPY was down 20 basis points. It wasn't like horrible of a day. It's just very difficult to not see any follow through at all. So that actually does not look bad. Carry in another inside day. So inside day off of the bullish day. So again, down 1.2%, but the way that the bank stocks have been moving, not that big of a move. You could see market breadth wasn't great today. It improved a little bit throughout the day from where we were, this morning. But again, you got small caps, and I don't even have anything else highlighted on the major index side. Even gold, silver, bonds. There really wasn't much action going on here for the day. So again, sometimes you just have those days where not a lot is going on. Interesting here. I saw this kind of early on, just biotech breakdown. I want to talk about this for a minute. This to me, right? So how do I kind of look at biotech? I kind of think of biotech as more, risk on, right? We started to see this 2 weeks ago, where biotech caught a bid to it, but it ran right into resistance. I was playing this a little bit, and unfortunately, I was kind of a wait and see to see if this thing could break out, and it also stalled decently on the weekly chart, right where it needed to kind of keep going. So I was getting really pumped up about biotech 2 weeks ago, saying, "Hey, maybe this thing could actually turn the corner, and we could get like some performance out of a risk on area of the market." But we did not get that. In fact, we're now, it looks like biotech is breaking down. So you could say that this is like somewhat of politically charged, but if you look at XLV, which is more healthcare stocks, they actually recovered a bit. They were only down 0.5%. So, and I think these names are more sensitive. Your pharma names, which has a bigger weighting in this, I think are more sensitive than versus biotech. You can see IBB was also down 2%. That's your bigger biotechs, where XBI has it's equally weighted, right? So the small caps have the same weighting as the large caps, but that to me is not another like thing that doesn't look right in this market. Is that the biotechs are leaning to break down, and you can see they've taken out this support and this support, and pretty ugly looking. And the fact that there was a lot of things that were rebounding, but biotech wasn't one of them. So I find that I have an issue with that. And I think also they're a decent, they're not the highest weighting in IWM, but they're one of the highest sector weightings. Banks, of course, are the highest weightings in IWM, the small cap ETF. But biotech is also, I think, top 3 or top 4 sectors within that ETF. So yeah, that stood out to me. Also, solar names have been getting, since they made a 52-week high the other day. Here's what the solar ETF looks like. Just about 4 days ago, they made a new 52-week high. I guess they technically made a 52-week high when on this reversal day, but into support again. So we'll see how this shapes up. We did see some call buying in Sunrun today. I took this trade. There's been I've been kind of watching this name as well as some of the other smaller cap, and it's a group that I like, even though I don't like the reversal that's happened in the last couple of days. So what did I do? We saw some short-term calls in this one. It's a $17 stock. I bought stock because I think this is a long-term trade for me. I don't think it's, if I get some short-term momentum in it, but again, this is off. This happens a lot. Sometimes you see calls and the stock actually goes down. So again, I'm in stock. I've got my defined stop level on this one. We are still above the 20-day moving average in that one, but not off to a good start in this one. Were there any other sectors that I wanted to talk about before I go into some of my trades for the day, as well as the option activity? Yeah, there really wasn't much going on here to the upside. Consumer staples, I think REITs, again, these groups are, it is insane what is going on in the REITs, right now. Like I tweeted out NEE as a little bit of a joke, but man, these things are absolutely on fire. This is where the money is going. REITs, they actually look like they want to take that next leg higher in this one. And then the other defensive is consumer staples. That doesn't look bad either. So, these defensives are continuing to trend right now in this minefield of a tape that we're kind of dealing with in terms of headlines. But those are the things. And I know that some people get discouraged when they see this, but hey, you could collect a nice dividend. These charts aren't even dividend adjusted, so try to look at the bright side. I know everybody likes to trade the growth names, but this is what's trending, and you can make money as long as the trend, as long as this continues on its trend, right? We never know how long a trend is going to last. And even though they're probably expensive, consumer staples, REITs, and utilities, they could probably get more expensive. So it's pretty amazing to see what's going on within these three groups. So what else to go over? IGV, the software ETF. Take a look at this. Maybe put this on your radar. Set a couple alerts. It's getting pretty coiled, right? If you're not familiar with what coiled is, it's when usually 3 moving averages are wrapped around one another. You've got 2 short-term ones, but you can see how bottled up this price action is. So set an alert maybe at 210. Set another alert at maybe 218.50, just a little bit outside of the value area. And also notice for the next month, October, right? And this is a developing value area, right? We're using volume at price to define this new of this month, right? So we've only got a couple more days of September, and this could even get tighter. Possibly, but usually when these value areas get super tight, that usually means a big move is coming in one way or another. So, be mindful of that. I remember last year, it's a little bit of deja vu, but I wanted to illustrate this. I remember last year, FDN, which is the internet ETF, got super coiled. So again, I'm not making any predictions. I'm just saying, hey, set your alert and play whatever, you could play whatever direction it breaks. Calls to the upside, puts to the downside. But remember how coiled this was, right? Very similar look. Same month last year. This was the internet stocks. All type of coiled here. Similar shape value area, very tight, and we broke it to the downside and got hit hard. So, could take away from again, coming to the end of September. And again, I'm not going to say which way this is going to break. I'm going to wait for it first, and I'm going to play it. But again, similar look to what that FDN Internet ETF looked like in September. So we'll see how it goes and how it develops. But I will be unbiased, and I will play either side of that. All right, some stocks. So that's away from sectors. Some stocks to watch. A couple, right? So Taiwan Semiconductor, one stock that's doing something different. I don't know if it's going to be affected, but look at the green bar in Taiwan Semiconductor. I was on Bloomberg a couple weeks ago talking about how this stock looked like it had the possibility to break out. We do have earnings coming up in a couple weeks, but this is a hell of a breakout. So we'll see. It's been very difficult playing breakouts in 2019, but that's a really nice candle. Closed on the absolute highs, and you could see I got involved in this trade today. So yeah, and was actually able to take a target down here in the January 46 calls. Next one, ATVI. This one didn't work today, but we'll watch this tomorrow. Again, really like this base. Here was your earnings gap. It's coming out of the base and it's retesting. So had an inside day today. That's not horrible. If you miss this, now you got a second chance. And again, use the stop. I actually want to add this. I have some short-term calls on in this one, but I actually want to put this on stock, in stock. Because again, if you look at this pattern here, if we end up filling the gap, it could take a while. But that's all the way up to 62. That's a nice percentage to kind of shoot for. What else do I have on my list? Sam. Should actually end with this one because I might be having a few Oktoberfest tonight. Uh, so it took out a Virgin point of control. This name got an upgrade this morning. So what I like, it's kind of the same thing when I look at option activity versus like an upgrade, right? It doesn't. I don't use that to really make a decision. It just kind of brings my attention to the name. Um, Again, I was looking at. Sorry, I always go back to this argument, but remember for option activity, right? Who trades most of the option activity? Institutions do, usually hedge funds, right? How are the hedge funds performing? Not well. I was just looking at Bloomberg was showing, some recent hedge fund performance of names like Point72, which is the old SAC. Was it Marshall Wace, another hedge fund? Their performance, they're trailing, they're getting beat up again. So you have to kind of think about that if you're looking at option activity and thinking that the hedge funds know something. If they all know something, then why are they not beating the S&P? So anyway, so I'll move on from this because I like to kind of give you this view because I think the Twitter world is so fixated on option jockeys. I think it's important to read the tape and so forth, but um, uh, you know, you have to formulate your own opinion and your own risk and your risk to reward situations, and you could use options that way as well as just trading outright stock. But Sam Adams, right? So where did this thing, big move up, big trend, fell down pretty hard from 430 all the way down to 340. And what I like about this is, I think what I like about this is the Virgin point of control taken out on this, right? So you can now use this as your stop if you wanted to trade stock. If not, you can kind of think about this, moving up to maybe the top of value. Again, this is new value area for the month of October, so this 393 is not going to be completely accurate. We'll see where it is at the end of the month, but it's one of my favorite beverages. They got an upgrade based on the Truly Spiked Seltzer. All right, we covered a few other ones. Costco is another one. I had mentioned this trade, this idea yesterday on private Twitter to members. I have not put this trade on. I'm still long in the Tribeca tactical portfolio, which is a cash portfolio. But I have not done anything yet. I'm just kind of watching this note. It reports earnings next week. But this is my long idea from yesterday, the 25th. What else am I looking at? The rails. Trying to get above the 200-day moving average here. And NSC is the one that I'm watching in the space. I was looking at had some strength earlier in the day, but I want to see if this thing. You could see that Virgin point of control sitting up there around a little bit shy of 195. Kind of an interesting little chart. Again, tough to find momentum. GD is another one that we've seen a lot of call activity, a lot of call spreads. Leaning to the downside. It was down 5 points. Ooh, I got the wrong chart up. Sorry. I was gonna say didn't think it looked that bad. It had down 5% today. GD was flat today, so kind of watching this. Maybe I'm waiting for this to kind of, we saw all the call activity like all in here. So I think if this reclaims these moving averages, that would be a spot for me for confirmation purposes only. Last one. Adobe had a nice day today and kind of breaking out of that channel. You could see. So another one to keep an eye on. All right, guys, that's it. Again, stick with it. Again, I try to think about in the beginning of the day if I want to be adding risk or if I want to be sitting on my hands for the most part. You could see again, I've been trying to trade as less as possible, lighter than normal. Continuing to do that in this challenging market environment. Every once in a while I do get sucked into a day trade, I bought a little bit of Roku this afternoon, which could be a full loss. We'll see. But again, the like the Twilio trade, for example, I got out of this in the first 2 minutes of the day. I was not greedy with getting out of this because I just think this market, again, being bid up 20 basis points, is going to really, can cause some damage, to the downside very quickly as profit takers come in and sellers come in. All right, guys, I'll leave it there. Have a great night, and I'll see you tomorrow. No video tomorrow. No video tomorrow because I will be in Las Vegas. Have a great night, everybody.